So, welcome back, friends. We had a very good day for the US stock markets on Friday. We had a jobs report which was relatively weak, um, showing that the additions to the workforce at 150,000 was much less than they anticipated, 175,000. So, it shows now that the labor market is also beginning to weak. And in this scenario, you could not expect the Federal Reserve to go and now continue its interest rate hike campaign. However, the jobs market beginning to weak can be a mixed blessing as well. Do realize the fact that the Federal Reserve has been hiking interest rates for 18 months in a row now. So, what happens is there are the lagged effects of the Fed hike campaign. And when you find that jobs market probably could be the last of the economic dominoes that is beginning to tumble now. We had inflation coming down, the CPI, PPI, core PCI, all this come down. And then now we are looking at something like a jobs report, labor market beginning to weaken. This may all be leading to the lagged effects of the US Federal Reserve rate hike campaign finally beginning to come out. The last of the dominoes, if it starts falling, then that is itself a very good indicator of a looming recession in your backyard. So, people say that the valuations at around 17 to 19 times price earnings ratio for the S&P 500 and Nasdaq a little bit on the higher side. However, the more important thing that you should keep in mind when you look at valuations is that is the job market beginning to weaken? That's one thing. And secondly, are the earnings of the companies coming down? When you find that all this is happening side by side, that these are great indicators that the economy is now beginning to weaken and is moving towards a recession. So all these are indicators, what you're seeing from the quarterly results, from the way the entire environment is, bond yields coming down from 4.85% to 4.6 is something to rejoice. But it could also be saying that now there is something else which is lurking in the background, the possibility of a recession. And yes, once that R word starts percolating around, you'll start seeing people and investors get very, very worried, very, very restless, and that can lead to the market coming down. When is that expected to happen? What our estimates are? When will recession hit? Now it's the question of time rather than if and when. More than if, it is the timing when. Get to know more. Please do join our Prime or Prime Plus groups, which are focused entirely on the US markets. For the Indian markets, please do join our premium value package. Gives you 1 week predictions in advance. You can also join the World Cup special, which gives you daily predictions on the Nifty and the Bank Nifty. Number to get in touch, 982-086-1044. Happy investing. Have a great week ahead. Take care. Bye-bye.